Okay, good morning everyone, and happy Friday, 19th of January. Hope everything is well with you. Just going to quickly recap then a couple of news items from overnight, a few things to mention from what's happening on Capitol Hill with the potential government shutdown issue, a few things about Reuters released a report about potential who might be the deputy under Jerome Powell going further forward into 2018. Then we're going to have a look at the calendar and a bit of a look at UK retail sales, and then I'll hand over to Sam and he'll look at a couple of the charts technically. So that's the plan. So looking at the charts as they stand at the moment, quite interesting. You've had a bit of an uptick here in the German DAX, but gold also elevated this morning. US equity futures are also slightly positive as well. Looks to be a little bit more dollar inspired in terms of the gold move than anything kind of risk associated. But if anything, gold and the Japanese yen are a bit firmer. But as I say, it looks to be more this kind of persistent theme about the dollar. And certainly there is some tail risks going into this weekend, just given the threat that come midnight tonight, American time, then there is a potential for a government shutdown. And so maybe a little bit of just lingering fears going into that, and we'll have a look at that story in a second. But with gold, I was looking at this on a bit of a shorter time frame earlier, because there was a bit of a pop in prices around 3 minutes before 8 AM London time this morning. There wasn't anything concrete behind that, but obviously it's managed to continue to pull away from that R1 all the way up to R2 in more recent price action. And so upside, you've got the high print that came in really 2 days ago in the evening on Wednesday that would have been up at around the 41 mark if we do push on from that level at R2. Likewise in the DAX, I know Sam's going to have a look at this in more detail, but we broke obviously the overnight Asia Pac high, and really there hasn't been much in the way of single stock equity news of huge significance. We just broke and triggered that level from last night in the futures, so we've run through R1, and then obviously we've just encountered a bit of resistance here from the Tuesday high, which would have been 13,346. So if we look at that on a longer dated time frame, as you can see here, that level just holding for the time being. Obviously a break of that would put us back to around the kind of 9th of January highs that we printed. So a decent level being tested in early trades. Again though, not on anything really particularly new. And if anything, the US indices last night were a little bit mixed. The Dow underperforming slightly, down about a third. Utilities were weighing alongside energy names, given a bit of a downside that was seen in crude oil, and WCI does remain lower at the moment, down about 72 cents at the moment. Tech was outperforming, so consequently Nasdaq did finish flat to slight positive. Just having a look then, with the dollar weakness, both major currency pairs are on the front foot this morning. Euro dollar already having a look up at the R1 level, which is obviously, and again I'll let Sam look at this more detailed technically, but we're close to that high print that was seen back on Wednesday's session, and cable continues to remain up in close proximity to the kind of weekly highs. So again, I'm sure Sam will still be of a similar mindset of looking to find appropriate place to probably get long, because overall from a fundamental perspective there's nothing too great, well, nothing much of a great deal new going on with Brexit. There's obviously a short-term risk with the UK retail sales report coming out later this morning, but I'd probably want to sit more on the side of potential dollar weakness, given that this debt talk in terms of government funding in the US goes down to the wire, which probably means we're not going to hear about it until way into the overnight hours, because probably it will be closer towards midnight US time by the time they actually strike a deal. So up until that point, potentially then expectation might be continuation of the dollar weakness, which will help fuel this support that we've seen in the major pair in cable more recently. So what is the situation on Capitol Hill? Well, here it is. A few details I've got for you. US House have passed a spending bill. This came last night to avoid a US government shutdown, but Senate Democrats say they have the votes to block the measure in a bid to force Republicans and President Donald Trump to include protection for young immigrants. So this was that association with the DACA story which we were talking about earlier in the week. The 230 to 197 vote came just over a day before obviously current funding is set to run out, which would be midnight tonight American time, East Coast. The bill would keep the government open through to, don't forget, this is only a kind of a stopgap fix till Feb 16th. So it's not a long-term solution by any means. So this is going to be a recurring theme, if anything, in another few weeks' time. The Senate, because remember, it's the House that has passed it, but obviously it needs to go through the Senate now. And the Senate did take an initial vote to advance the bill late last night, which went through, but was now heading towards an additional procedural step, which requires the 60 votes. And this is where the Democrats say they will be able to block the whole bill in its current guise going through. This is kind of the stepping stone process that the way the chambers of Congress work is that you have to have a vote to have a vote, and then you have the vote to go ahead, and it gets kind of agreed in that sense in terms of the way that they do things. To avoid a government shutdown, the Senate, in terms of the options here, they can either pass the House temporary spending bill, so basically the one that the House has proposed, they just say, fine, as a compromise we agree, let's push it forward, or they can make changes and send it back to the House. The House then needs to have another vote, but the House isn't scheduled to be in session until next week. But of course, if push comes to shove, and we have seen this many times before, the threat of a shutdown means that the politicians basically continue to work all the way through and to push this through, given the gravity of the situation, its repercussion for actual employees, if you like, working for the government. One of the other key measures, though, of course, is that this isn't just about US politics. The reason why I think, actually, what could be very interesting today is, as we come towards the latter part of the session, potentially this could be after the European cash close. It wouldn't surprise me if you start to see investors take some off the table in the equity market, because I would imagine most people are not going to want to be in a position of large risk, given the fact that although the baseline expectation is that this situation on the US government gets sorted for the short term, there obviously is a marginal risk that it doesn't. Coupled that with over in Europe, in Germany, you've also got the kind of final decisions around the CDU, CSU and SPD German Grand Coalition talks. So on that front, the former head of the SPD, Kurt Beck, predicts that circa 600 party delegates will vote about 60-40 in favour of coalition talks with Mrs. Merkel's bloc at this Sunday's party convention. So not only have you got potential risk surrounding the US, you've also got it for Germany. And although it is marginally small, why keep that position in such size over the weekend? Probably then book some, take it off the table, and consequently you could see a little bit of downside come in towards the latter part of the session. Unless, of course, something gets resolved very quickly ahead of time, and then that will help support prices. But just given the fact that we do remain largely up close proximity, certainly in the S&P 500 to the record all-time high levels, wouldn't be surprising to just see it potentially drift lower later into what might be actually the US evening rather than in our session. But something just to be mindful of, I think. Okay, other headlines. Looking at the composition of the FOMC is going to be very important going forward, because as you'll remember, it's not just about Janet Yellen. Stanley Fischer's already stepped aside. Dudley is to follow, so you're losing your three most influential FOMC members of 2017, of course, all of which were of more dovish stance than anything. And so now people are looking, we know Jerome Powell will take over as the Fed chair, but who's going to be number 2? And this is what the papers are talking about this morning. Wall Street Journal, Fed's Williams, which is the San Francisco Federal Reserve Bank president, is under consideration by the White House for the post of vice chair. And so Williams, just to refresh your memory, on the scale of hawkish and dovishness, Williams sits right here. So actually, in terms of voting members, Williams is the second most hawkish. So Powell obviously sits kind of in a similar region to where Yellen is, hence the continuity, so kind of neutral, dovish. But Williams would certainly fit much more on the other end of the spectrum. So quite interesting this as we go forward into subsequent meetings thereafter, particularly going into the kind of Q2 and beyond 2018, where expectations are that potentially inflation starts to pick up. And if you're of the belief of Piers Curran and Jans Hassius, then, and Piers will be pleased that I mentioned those two names in the same sentence. For those who know who Jans Hassius is, he's the chief economist of Goldman Sachs. Piers Curran, obviously our head of trading. They're both of the belief strongly that the Fed are going to hike 4 times. Deutsche Bank actually have the similar thinking as well. I'd say Wall Street is a little bit split at this moment in time between those that believe the Fed, as they are currently communicating, will issue 3, but some are looking for a more kind of hawkish 4 if the economy continues to pick up and inflation certainly starts to take hold. Other things just to be aware of, just so you, and just so while I'm on the mic, the DAX just having a little look on that level now. So weekly highs just printing now in the DAX, also the intraday high. So a few other things here. You've got IBM, and now I'm just pointing this out because trading information on a single stock perspective is actually quite difficult, because it's not always as binary as the earnings per share and the revenue, let's say, beat expectations, therefore net result, I'm buying IBM. Because if you did that last night, you would have been the wrong side of a pretty nasty fall, because IBM shares, their sales actually were good. The company saw revenue growth in 2018, spurred partly by software, but their shares fell. Now I point out IBM because they're one of the bigger firms to report so far as this earnings season gets underway. Now one of the key things here is that although IBM managed to increase sales for the first time in almost 6 years, basically analysts and traders were looking at this segments within the composition of their revenue streams, which is key. And so basically what happened was their cloud computing division and other new products which are based around cloud, analytics, security, mobile applications, these sorts of things. So away from their traditional core products, but more into the things that are seeing, let's say, higher leverage and more popularity and usage at this point. So have got more scalability. They actually came in line. So this is where it's quite tricky trading these single stock news information unless you are fully informed about that stock in particular. Now obviously I've gone over to this before. Celerity Global Insight is the best resource for that to get yourself fully prepped. But if you were new to the market, you could have easily got the wrong side of this and just looked at the surface level figures and not understanding and appreciating the nuances of the bank and its, or not the bank, the company and its product suite and where the growth is, and hence where the analysts are looking for outperformance, which didn't occur with IBM last night. All right, quick look at the calendar because there's a few things I just want to mention on UK retail sales, then I'll hand you over to Sam. So as you can see, the day is kind of divided into UK retail sales in the morning, and then you've got University of Michigan. This is the preliminary reading for the US. It's expected to be at 97 without even looking at the charts. This number is already up at close to multi-year highs, if not all-time highs for that specific data set. So confidence in that respect remains very solid in the US, and I was watching Sky News this morning and I saw they were interviewing people in the US area of Utah, which I guess you would define as being central southwest, I guess. And it's quite incredible, people's perception of Trump from the man on the street. And the general consensus was the guy's doing a fantastic job, more people employed, more jobs, fantastic economy. And Trump, they were all kind of the view that the fact that even though he can cause confrontation, that's what America needs. And so it's just quite phenomenal, really, actually, when you kind of, you get so, certainly in a Western European sense, driven towards looking at Trump in a certain way, but certainly outside of the East and West Coast, Trump's popularity still remains quite incredibly high at this point. So just having another quick look then to wrap up. Retail sales from the UK. This is really what I just want to quickly have a look at. So the previous UK retail sales came in at 1.1%. That was a touch higher than expected at 0.4%, so actually slightly outperformed. Bill, I know you're obviously flying the flag. I've just seen your comment in the chat room, "Make America Great Again." Let's do this. Just having a look at retail sales though. One thing I wanted to mention is I saw quite an interesting article here in the FT this morning. And just given the fact that this article has come out, it does make me think that if enough people have read this article, they're probably not going to buy into retail sales, irrespective of whether it's good or bad. Because what the article basically is saying is that, well, let me go over a couple of points just to summarize it. So essentially, for the past 4 years, official statistics have shown sharply rising sales in November, followed by a slowdown in December, as according to the Office of National Statistics. Now obviously from a seasonality point of view, late November tends to be Black Friday and Cyber Monday and so on. Then you have this kind of run-in or the kind of peak, the drop-off for Christmas, or a lot of people are buy presents, taking advantage of Black Friday to then facilitate their gift giving, if you like, in December. So it's having a meaningful effect on the data. But one of the points this article was making is that Black Friday has evolved every year since its introduction, expanding from a single day of sales to a weekend to now several weeks. I mean, even if you think about it, I mean, it's quite incredible. It used to be 1 day, then it used to be 2 days, Black Friday, Cyber Monday. But now, if you remember, there was discounting pretty much throughout November in itself. So trying to actually measure this data now becomes quite complex because most economic data generally takes a basis average over a number of years, so it's more accurate and more consistent in a sense. But this is proving to be difficult because of the behavioural change to people moving online in greater numbers. Now Christmas, of course, is one of the most important sales periods for Britain, and its retail and wholesale sectors, which account for 11% of national income. About 30% of yearly sales are made in the final 3 months of the year, according to unadjusted figures. And so going into this retail sales report, what is the current sentiment on the street? Well, Visa, the credit card company, they've reported a 1% decline in spending, but the British Retail Consortium have found that overall spending had risen 1.4%, so completely opposite at this point. We've heard from the supermarket names, they've actually done very well, but some of the retailers have done very poorly. So again, it's going to be interesting to see how this plays out. I've got a feeling that either way, it's probably not going to be in line. So it's either going to be very good or very bad. The question would be is that this article would suggest is how much can you read into this particular month's release, just given these seasonal effects in that sense. So what does that mean from a trading perspective? It just means I think you've got to be a little bit more prudent in booking trades, or if you are going to trade it, then coming out of that trade or scaling out the majority of the position relatively quickly and not looking for too much. Obviously, if we got to the point of a breach of 140, then for sure, we break that level, we're gonna push higher, would be probably the most likely outcome. Okay, gonna hand you over to Sam. So wish you all a good day, catch you in the chat room, and if I don't speak to you before, have a good weekend.
Morning, guys. Just as we're going to go through the charts, worth just talking about the pound, if anyone it is, on this sort of weaker dollar, continuation of sort of the stronger pound sentiment as well. You've got the 2018 high just above this R1, which is finding quite good resistance for now. Obviously, the UK data could have the potential to really dictate which way this goes, but definitely worth keeping an eye on that. With the pound pushing higher, you can imagine the FTSE just perhaps finding resistance on that pivot, to come back lower, which has been actually trending down last few days in, well, this week really. So if the pound was to continue to push leading up to the data, still got about 35 minutes, it could be we see the FTSE come back down to those levels that we talked about in the briefing yesterday and the wrap. You can see this sort of low area here. If I just circle those to make it a bit clearer, finding good support. Stronger pound, perhaps through 140, you could see a break of that with that correlation still working relatively well. Along with the weaker dollar this morning, euro just pushing to above that R1. I think, well, there you go, euro above R1 there. Important level on the same day as the pound found that top. If you get a push through here, could be opening the door back again to the levels we saw on the 17th. So I definitely favour for now the weaker dollar. We've been reading last few days and this morning as well that there seems not everyone, a majority of the market believe there's going to be a dollar correction soon, but sentiment at the moment does seem to be for that weaker side. I saw Michael in the chat earlier talking about the dollar, Aussie dollar, sorry, the highest for a fair number of weeks, and you can see that there really been pretty one-directional since the middle of December there. In terms of next market levels to be aware of, you've really got a bit of open room here, so maybe the weaker dollar will continue for a bit. In terms of pullbacks to perhaps continue this trend, you can see just how good R1 was as a resistance level this morning. If we come back down again, it could be a good area for support. You can see perhaps that classic already did work, but definitely a level there to be aware of. The yen, or dollar yen, you can see broke through S1 in yesterday's low. Obviously the first test of that offering quite good support, breaking through that area now quite nicely, and the original targets you would probably have in mind from the lows of the 17th, which we're just finding support on there. So it might be that we have a retracement, and S1 is not a bad place to look to get in, or perhaps a classic of this level that we're sort of testing now, and S2 and the lows of the week come into play there. With equities, I'm going to start with the Nasdaq because that's just pushing on now. I can see the corner of my eye. Pretty interesting level that you see just marked here that we're pushing through. I just put on Twitter what could be more likely today, 140 in cable or S&P to make a new all-time high, and I think there's definitely a chance of both of those happening. There's definitely that a bit of negative sentiment for equities, don't get me wrong, but I feel it's just sort of perfect for Trump to come and save the day as if it wasn't already planned to do that. So I still further the upside, but it might be towards the end of the day where we see that really come to fruition. If the Nasdaq was to push through here, you've got a good strong resistance level at R1. If we come back to the pivot, it's not a bad place to look to go long, but we are sort of stuck in this consolidation range over the last couple of days. You can see it has been pretty technical actually, the Nasdaq. I would prefer it to break out of this sort of messy area. Obviously not really the best sort of time to get involved anyway, and just finding resistance on what was the high of the day. For perhaps the S&P to push on to have the chance of making a new all-time high, I think the pivot is a massive area. You can see here early hours of the morning, or pretty much 1 o'clock, did find resistance on there. I feel if we're to push through there, then all-time highs come pretty quickly. Dow Jones, well actually I'll stay on S&P. I think S1 is still a nice area technically to perhaps look to get a rebound, but it might well be that what we've seen for the last two cash opens is a bit of negative sentiment come through. So it's just sort of wait to see. I think it's the best approach before perhaps getting a bit more clarity towards the end of the day. Dow Jones, which you can see also pushing on, similar to sort of the Nasdaq and the S&P in that regard, almost at its highs. But you've also got 26,000 on the futures at the pivot. You've got the high of the day there. I would expect to see some sort of resistance, and if I was long on a break perhaps of this point in the market, I would definitely be looking to take some of that trade off as well. Gold did push higher, obviously, as Anthony mentioned, well, quite nicely there, and you actually did get a chance for a sort of classic from that on the weaker dollar. Let's have a look if we can see. R2 sort of holding as resistance. I imagine it will be rather choppy around here. Obviously got the US data in the afternoon, close of the week, to take into account, but I do think the weaker dollar is the sentiment for a while, to be honest. I think we'll continue to see that, regardless of what some analysts believe that we might get a 2 to 3% correction for the dollar. Oil, quite interesting yesterday, in the fact that the data release did come out positive. We broke through the pivot, which offered a good opportunity to sort of target this point in the market here, sort of the high of the beginning of the afternoon. But it's sort of, and if I just drag these charts over, you can see it looks quite messy. A couple of months ago, or in the last 2 months, whenever we had a data release, regardless of whether it is bullish or bearish, the majority of the time price did rise higher, and we saw that yesterday. But into the close, you can see there quite an aggressive sort of downward move. It feels that the buyers aren't just ready to take this higher, and I can see, if anything, I think we might just range down over the next sort of couple of weeks. It might take something quite big to sort of see us really push higher. Resistance level here, what was the low around that S1, 63.44 in the futures, a key level today to be aware of. T-notes, US bonds, 10-year, you can see pretty low still, lowest it's been for a while. I'll try that in TYA. There you go. Still relatively low. In fact, the lowest, if I put this on a weekly chart, that we've been for quite some time. Areas it could go through. Now we've broken through this support area. You've got levels not seen since the middle of June 2011. So a bit of open room to go from a sort of technical point. But a couple of opportunities. The Aussie dollar just coming back to have a look at S1, R1 in not too far away. Equities pretty much on those sort of highs of the day that they made early morning. Resistance levels. UK data in just under 30 minutes now. Let's have a quick look at the pound, see if we did get a push through. That R1 holding quite well. So I did take a bit of a breakout long. I've still got my stop on this trade, targeting the high of the 17th, but it doesn't look like it's going to happen. So it might be, from my point of view, to get out of that trade ahead of the data and see what happens from there. As Ant mentioned, obviously we'll take into account some of the Black Friday stuff. So it might be that we see a really strong number, only for it to not do too much as people realise, Black Friday is what it is. So we'll get on the mic obviously throughout the day. Any questions about any of the charts, do let me know. Just before I wrap up, Nasdaq just pushing through that level to be aware of, and it looks so close now to perhaps making a new all-time high, and I imagine S&P is having a look at that pivot. Yep, it is. So we'll catch up with you guys in the day, midday, and we'll sort of do a wrap as usual. But I hope you all have a good rest of the day and good weekend if I do not speak to you guys.